The House Committee on Economic Competitiveness will come to order. Would the clerk please take roll?
Chair Hoadley.
Here.
Representatives Bonack.
Here.
Outman.
Here.
Harris.
Here.
Bagol.
Here.
DeBoyer.
Here.
St. Germain. Here. Grant. Brixey. Here. Tate.
Here.
Kofia. Mr. Chair, you have 9 members present. You do have a quorum.
Thank you. Representative DeBoyer makes a motion to approve our meeting minutes from October 30th. Seeing no objections, the minutes are approved by unanimous consent. Okay, today the House Committee on Economic Competitiveness will take testimony this morning on a bill package that would allow the state of Michigan to invest retirement funds into cryptocurrencies, establish a digital asset bill of rights, and allow orphan wells to be used for Bitcoin mining partnership programs. To follow, Representative Mueller has House Bill 4492, which we'll also take testimony on. We will begin with the cryptocurrency package, and since I have no idea where to begin with crypto, we're going to start off with Representative and Majority Floor Leader Posthumus on House Bill 4511. Begin when you are ready, Representative.
All right, Mr. Chair, thank you very much for having me. Committee members, I really appreciate it. So, I'm going to talk a little bit about a 50,000-foot view first on why the overall package is. I think there's 6 or 7 bills up before committees today regarding cryptocurrency, and Schuette has joined me in leading this effort along with Representative McFall, and so I want to give a 50,000-foot view on why. In general for all of it, and then also get into a little bit on the crypto Bill of Rights. So first of all, the 50,000 foot. I believe I have a fundamental belief that in the near future, whether that's 5 years from now, 10 years from now, 20 years from now, cryptocurrency and digital assets will be the foundation of the financial world for a lot of reasons, whether that is security. Cryptocurrency is substantially more secure than cash, substantially more secure than credit cards, debit cards. Our current financial system is less secure outside cryptocurrency than it is inside cryptocurrency. That's one reason. Another reason, speed of transactions. If you've ever tried to wire money overseas, which I have, that is a mess. For me, it took 28 days, and the entirety of that time, none of the banks that I talked to knew where the money was. 28 days, and that was this century, right? With cryptocurrency, that transaction can happen in 5 seconds for a fraction of the cost. So for a whole lot of reasons, it makes sense that digital assets and cryptocurrency will become the foundation of our financial future. There's a lot more reasons outside of that, but those are the 2 that just are the easiest to make sense of. The pushback historically that I've gotten anytime I have conversations on cryptocurrency, number one is volatility, right? And people are scared of cryptocurrency because of volatility. I would suggest 2 different things. Number one, actually 3 different things, starting with the fact that it is the best performing asset over the last 10 years. No other asset comes close, none. If you're talking about real estate, any other stock markets, none of them come close. So if you're looking at a long-term 10-year horizon, nothing comes close. If you pick any point on a time scale during the existence of cryptocurrency, there is not a single 4-year period where Bitcoin has lost money over a 4-year period of time. Not one. And so short-term volatility, sure, there is some of that, and there's that in all assets. So that's the pushback I get, but I want to make sure to be clear about that. It's also known. Also, a lot of that volatility is due to a lack of institutional acceptance and adoption. Over the last year, we've seen a lot of institutional adoption. We've seen the United States establish a crypto reserve. We've seen several states throughout the country establish a crypto reserve or start the process of establishing one. We've seen the Saudi Arabian Sovereign Wealth Fund establish one and heavily invest. We've seen the 3 largest financial firms in the world go heavily into crypto. The worldwide institutional adoption of cryptocurrency will help stabilize any of the concerns with volatility. The second concern I get is I just don't know anything about it, and so I don't want to talk about it. I don't want to legislate it because I know nothing about it. That's a challenge that we get into in government all the time. Anytime we have a change in technology, we have an advancement in technology, the technology takes off and government lags 10 years, 15 years, 20 years behind before it puts in place the parameters to help ensure public safety or other mechanisms. Right now, we are in a position where we can get ahead of the curve when it comes to crypto. Representative Schuette is going to talk about the pension funds. Right now, we can already invest in pension funds, but there's no guardrails. Representative Schuette is going to talk about why his bill is important to manage that. Right now, there are thousands of people, if not millions of people in the state of Michigan that hold cryptocurrency, but they have no provisions to protect the fact that they hold cryptocurrency. That's what the Bill of Rights does. House Bill 4511 establishes the right for individuals to hold cryptocurrency and not have the government step in and say, oh, wait, if you want to have that, you need to be licensed. Or if you want to pay for something with cryptocurrency, now you have to be licensed. It allows the open participation in the economy with cryptocurrency. Right now, that's already there, but at any minute, at any time, the government can step in, the executive branch can step in and say, nope, you can't. And a lot of individuals throughout the entire state will be in a world of hurt. So that's the general 50,000-foot view. That's the crypto Bill of Rights. I'm happy to take any questions on 50,000 foot or the Bill of Rights.
Thank you, Representative. That
Oh,
must have
y'all
been-
are easy.
That must have been.
Oh.
Wait a minute. We do have Representative Altman.
Thank you, Chair, and thank you, Brian, for your testimony. Just a quick question, kind of a 50,000-foot view question, and forgive my ignorance, but how does cryptocurrency work exactly? So do these investors, do they hold these digital assets in some sort of bank account, or is it like a digital wallet? How does it work?
It's a good question. So there's a lot of different ways. So we'll start with the old-fashioned way, is which it's essentially an electronic wallet. Basically, you hold it on a flash drive or your hard drive, that type of thing. Also, as of now, over the last several years, something called crypto ETFs, exchange traded funds, which we all commonly use in other financial aspects. They now have ETFs for cryptocurrencies. Bitcoin ETFs, Ethereum ETFs, that sort of thing. And so if you wanted to invest in cryptocurrency that way by holding a federally regulated exchange traded fund, you can do it that way too.
Thank you so much.
Yep.
Thank you. Before moving on, we do have a card to read in. All right, Representative. Sorry about that. Fire at will.
Thanks, Representative. I half understand this stuff, okay? What's the underlying asset of value that is represented by a Bitcoin value?
If you're talking about Bitcoin, so there's a couple different ways to look at it.
It could be any of them.
Yep.
But
Yeah, so we'll use Bitcoin as an example, and there's going to be other people testifying after me that can give a little bit better explanation of this, but I'll point out two things. One, unlike the U.S. dollar, which can be and is printed infinitely, right? There is a maximum number of Bitcoins that will ever be available in the history of the world, and that number will never change. It can't change. And that is, there's 21 million Bitcoins available. And there will never be any more than that in circulation. The fact that scarcity exists and finite ability to receive it exists in and of itself provides a store of value. Whereas a U.S. dollar, as we all know, the U.S. dollar has lost 7% of its valuation over the past 150 years or 200 years due to the ever-expanding growth of the money supply. So that's one intrinsic value in it. Other cryptocurrencies would argue they have different things that provide value. Ethereum would argue that their overall technology and ability to use the transactions, that's what provides them value.
So arguably, it's a digital placeholder, just as a $100 bill would be a digital placeholder, or I'm sorry, a tangible placeholder for value you've created, whether it be labor, whether it be product, whether it be, it's an exchangeable currency that is in a digital fashion that is not subject to things like inflation because we can't print more.
For Bitcoin, that would be the case, yeah. Or it's similar to gold, right? Like
Right.
what gives gold its value? The fact that there's really a limited supply of gold, and it can be utilized in a medium of exchange.
Okay, thank you, Representative.
One moment, Representative. We'll get you on the list. And I do want to remind members, we're getting the 50,000 view right now. We're going to have more testimony that's going to bring that back down to ground level that may, in that testimony, answer some of the questions you do have. So if you've got things that are specific to the 50,000 foot view, now's the time. Otherwise, we do have a lot to get through. Right now, we do have a question from Representative Brixey.
Thank you, Mr. Chair. Representative, do you have any? I don't see any kind of auditing requirements in the bill, and I have some concerns due to the newness of this. That
Are you
there's
referring to the pension fund bill, or which bill are you referring to?
your bill that creates a new act that says we can't we can't ban.
Oh, I see what you're saying. Yeah.
Okay, so there's no one of the limitations of Bitcoin is that the auditing of it is challenging. And when you are talking about working on, using investments for pensions, you mentioned there's never been a 4-year span where they've lost money. But, I think your front desker who's investing in their 401k really needs much more than a 4-year view in terms of measuring what the long-term stability of this investment type is.
So I'll give you a couple things. Specifically on the pension fund, Representative Schuette will talk to that, and he'll be able to help address your concern when it comes to pensions. One thing I will say is on that front, the fiduciary in charge of the pension fund could invest in Blockbuster stock today, right? Like, she's not prevented from investing in that. So keep in mind there is a fiduciary responsibility still. That's the only thing I'll say on that. As far as the ability to audit, I'm not sure what your concern is. I don't know in the last time your outside of taxes, which it's still subject to the same auditability from a tax law perspective. I don't know when the last time your personal finances outside of tax preparation was audited, nor do I think it probably should be.
I'm not supplying my personal finances as an asset that the government is investing in.
I'm not following. So you're talking about the crypto bill of rights. The thing that does is it provides the right for an individual to hold cryptocurrency without the government saying they cannot or have to be licensed to do so. So I'm not sure where auditing comes into play here.
The auditing of the crypto, the people who are selling the crypto to evaluate its stability.
I mean, the market evaluates the stability. I mean, you can look back at the price of Bitcoin or Ethereum from today all the way back to its creation and early existence.
All right. Thank you, Representative. We'll move on. We have one more question for the 50,000-foot view from Majority Vice Chair Bonet.
Thank you, Representative, for helping us try to understand this. So you said there's 21 million Bitcoins, and that's all that can be created.
Correct.
And then, of course, the value goes up and down. So when individuals own Bitcoin, can more than one individual own one Bitcoin? How does that work? Because if we start investing and millions of people start investing in it, all of a sudden there's not going to be any more Bitcoins.
Right. So there are, you can invest in a fraction of a Bitcoin, right? Like so that it is fractionable, because it's digital, right? I mean, similar to how like gold, a gold bar, they used to shave a gold bar, and that's how they would fractionalize gold. Bitcoin and other cryptocurrencies can be fractionalized as well.
All right, thank you. In the spirit of moving on, we're going to bring up Representative Schuette to testify on House Bill 4510. Start when you are ready, Representative.
Well, thank you, Chair Hoadley, Vice Chair Bonak, members of the Economic Competitiveness Committee. It is a joy to be back here with you all today, and I appreciate the opportunity to testify on behalf of House Bill 4510, which amends the Public Employee Retirement System Investment Act by adding a new section. And what this new section would do is it authorize the state treasurer, when acting as an investment fiduciary, to invest in certain cryptocurrencies under prescriptive circumstances. And what are those circumstances? Well, one, the crypto asset has to have an average market cap of at least $250 billion over the previous calendar year. That is to avoid exposure to the extremely volatile meme coins you may have seen about on social media. Two, the investments are made in the form of ETFs issued by a registered investment company, which I think might address some concerns about any audibility or tracking of the asset's financial history. And three, no more than 5% of our state's pension fund may be allocated to digital assets, which if you look at how major pension funds or major investment funds are invested, that 5% is typically the threshold one would invest in an asset with a higher degree of volatility, but also a higher degree of return. And I think that degree of return is why this is an asset and a potential that we should go down and where we need to put in these certain guardrails, because our intent is to open up our pension system to gain exposure to what is a investment opportunity that provides substantial capacity for growth. So, for example, the Bitcoin ETF, $8 million. If that $8 million had been invested in 2018 by the state treasurer at the beginning of the new administration, that $8 million would have had a more than 600% return. $63 million would be its current status. If you invested $10 million in the Grayscale Ethereum ETF, that $10 million would be $45 million. So, substantial capacity for return on investment that's value for Michigan taxpayer dollars and helps our state's pension system be providing the growth to give retirees the security that they deserve. And I think also the guardrails that we put on this are important, where you limit exposure to cryptocurrencies that are only widely adopted and high capital digital assets. And we have layers of institutional oversight provided as well by limiting these to exchange-traded funds. So I think that House Bill 4510 is a cautious but forward-looking policy towards integrating digital assets into our public investment portfolios. With that, look forward to any questions from members of the committee.
Thank you, Representative. I think what we're going to do here is we're going to continue on with the rest of the crypto bill package, and then we'll back into some questions before moving on to the next bill. So with that said, thank you. I know you've got places to be here in a matter of minutes. So
thank you. Appreciate your time.
We're going to bring up Representative McFall to testify on his bills 4512 and 4513. Thank you, Representative McFall. Start when ready.
Thank you, Chair, for having me today to talk about this important issue. I'd like to thank the committee for having me here today, Chair Hoadley, Majority Vice Chair Bonak, and I would say Grant, but she's not here. Good morning, representatives. Thank you for having me here to testify in support of House Bill 4512 and 4513. As Representative Posthumus outlined, this legislation package aims to position Michigan in line with current cryptocurrency technology. The legislation protects cryptocurrency users, establishes a framework for state investment in cryptocurrency, and allows currently abandoned infrastructure to be used for Bitcoin mining. My bill 4512 allows Bitcoin miners to tap abandoned oil and natural gas wells owned by the Michigan Department of Environment, Great Lakes, and Energy for electricity generation. These wells, which leak methane, a potent greenhouse gas, can be repurposed to power Bitcoin mining. In exchange for free access to this energy source, the operators must later cap the wells, addressing an environmental hazard. House Bill 4513 additionally offers a tax exemption for Bitcoin mined through this program, incentivizing operators to assume responsibility for well remediation. We do have a substitute that I know that you guys have already been given, where we've been working with Eagle with some of their concerns to incorporate those, which we're continuing those discussions. So these bills are ultimately about preparing Michigan for the economy of tomorrow and making sure our residents benefit from it. By embracing smart regulation and innovation, we can unlock new economic opportunities, attract tech investment, and create good paying jobs while also protecting consumers. With that, however you want to do this, if you want me to stay up here for questions, or if you want to bring up the people that know all the technical questions or answers.
Yeah, absolutely. We do have a question from Representative Brixey.
Thanks, Mr. Chair. Representative, do you have any concerns about, the cost of energy for our ratepayers has been very high. And I'm wondering if we think that an incentive, a tax incentive in a bill that prohibits any kind of taxation of the crypto transactions is something that will be a positive given how much energy use is required for it. Why, can you address that aspect?
Yeah, these are abandoned wells. So the abandoned wells, they're coming in and utilizing what is actually just already there, draining out, that we're not using for energy production. So I'm not sure how it would impact ratepayers.
Because we're giving them we're giving them a tax break to do it as an incentive.
Right.
And with the idea, I think that the offset is going to be a positive for utilizing this energy, and in a perfect world, helping clean up the environment. But when you step back and look at the 20,000-foot view, Representative Posthumus's bill doesn't allow imposing any taxes on his bill when it's being used as a method of payment, even though everything costs something. And what are the costs to the underlying ratepayers of cryptocurrency?
I'm not sure I fully grasp what you're asking, but these are abandoned wells that the miners come in and set up a generator, and it runs that. So I'm not sure how that would impact ratepayers.
The overall power usage of it.
But the abandoned wells, that's what's running the generator.
Yes, I understand that.
So I don't understand your question. But they're not running it
for all of it. It's not like their only source of power is abandoned wells.
For mine, it is. That's what these bills are.
And that's why I'm asking you about the bigger package.
That was probably a question for Representative Posthumus then.
Right. And I'm not going to, and I wasn't able to get a question for Schuette, and
okay.
Convenient.
Thank you, Representative.
Okay, thank you.
No further questions, but we do have a presentation that may help answer some of these questions. Again, that's why I wanted to hold off until we had all the information before us before we get into confusing questions and off-topic questions. So wishing to testify in support of the bill, we have a presentation from Amber Harris from the Michigan Bitcoin Trade Council. So Amber, if you'd like to come up and start when you're ready.
Thank you. Thank you so much to this honorable council. This is a real big honor. Oh my goodness. So this is a very granular level presentation. So to understand why you want to invest your pension fund, you have to understand what the asset is first. And I think that we come and we rush into these presentations saying do this without any education. So this is why the Michigan Bitcoin Trade Council exists, is purely to educate why Bitcoin is the superior asset and why Michigan, we need to focus on it to actually innovate our way out of where we are as a state. So what other states have already done, because that's a big question. Are we the first state to look at this? And no, we're not. Arkansas has passed protections for mining. Colorado has crypto bills for tax payments programs. Montana protects nodes, kind of like Montana has passed a bill that protects the technology behind Bitcoin. Oklahoma protects self-custody, again, another similar bill to 4511. Tennessee recognizes decentralized Bitcoin governing organizations. Texas has passed the Strategic Bitcoin Reserve, as well as tons of mining bills that are very pro-mining, that has gotten a lot of companies to go to their states. Utah, legal structure for decentralization. Again, the technology and guardrails that we see for Bitcoin and crypto. And then Wyoming has been a very shining example of where we should be as a state. They have created good money transmitter laws that have gotten companies like Kraken to go there and help with their economic development in their state. So basically, what is Bitcoin? Bitcoin is the truly first decentralized digital money. It was created in 2009 by a pseudonym Satoshi Nakamoto. It has no CDO, no company, no headquarters. It is a truly, it's ran by nodes and miners. It's ran by people. There is nobody that can come in and ruin what Bitcoin is. It is built on a peer-to-peer network. Representative Posthumus did a great job and touched on how it can transact money in the matter of seconds. And to Representative Brixey's points, it is very audible. The ledger is audited every 10 minutes. It's the most transparent, decentralized system that we ever have. It is a very audible system on the ledger. And again, there's only 21 million Bitcoin. It is very scarce. And how it works through a series of miners and nodes. The miners transacts the Bitcoin. It creates and tries to solve what is Bitcoiners don't really like this, but we call it a computer or a mathematical problem. And there's miners all around the country that use energy to solve this. It's not hackable. That it's been for 17 years the most hackable attempted hacked network, and it hasn't been hacked. So the durability of Bitcoin and the network is what also has given it its reputation. Nodes act as the referees. Anybody can run a node. I can run a node. You can run a node. It's what keeps the system safe in terms of like knowing there's no double spends. That's what keeps the rules and the protocols accurate, where there's no ability to have more than 21 million. It's ran in the protocol. The first block was mined in January 3rd, 2009, and this was Bitcoin was born out of the bank bailout in 2009. So the creator saw a problem in our monetary system, and I think we see it all now too with inflation, and that is why Bitcoin exists. Bitcoin key monetary properties. With money, you need there's properties that we have for gold and for a dollar. It should be divisible, fungible, durable, portable, and it should be scarce. But our governments have printed our money to where Americans are suffering now, and it's not scarce. So that is why a global asset like Bitcoin helps us protect our value. Adoption timeline, this isn't new. Again, we've been around Bitcoin's been around since 2009, but it has no CEO, it has no advocates, it has people like us that care so much about our communities to invest in this asset, that come and testify in front of everybody to grow this apparatus, not because we have anything to gain, but because we care so much about our community to thrive. 2010 it was launched. In 2013 it had major media recognition. In 2017 there was a giant surge. Bitcoin reaches an all-time high of 20,000. Now it's at 104,000. But back in 2017 that was a pretty big deal because we thought it was going to fail. A lot of people thought it was going to fail. 2021, El Salvador adopted it as legal tender. And now we see El Salvador, which was one of the most dangerous countries, thriving now, using that Bitcoin as legal tender. Their communities are thriving. Their streets are safer. They've revamped their prison. People have hope with Bitcoin because it is a very deflationary asset where people see their products appreciating in value. And in 2024, the U.S. adopts ETFs approved by the SEC. And again, that's really, really big. BlackRock, you see a lot of banks investing now into the asset of Bitcoin because they see it's not going away. I am really bad at this. Digital gold and inflation, a hedge of inflation to inflation. Bitcoin rewards savings over spending. Number go up theory. That is why Bitcoin, because of its scarcity, every 4 years it halves its cycles. It lowers the amount of Bitcoin that are released into the ecosystem. And that gives it its scarcity. And the last Bitcoins will be mined in 2140. So we have a ways to go. Self-custody, again, you don't need a bank to operate Bitcoin. It's very custodial, self-sovereign, self-custody, no banks. Long-term holders have seen historical outperformance. Representative Posthumus touched on it, but Bitcoin has gone up 1.6 million% since its inception in 2009. It is the best asset in our history. And knowing that it's a global asset and we're 5% adoption right now, because these conversations are extremely hard to have. Bitcoin is a very daunting topic. And knowing that we're at 104 with only 5% global adoption, we're going to be kicking ourselves as a state if we don't adopt now. And at least have the conversations, at least look into more pension fund adoption in our communities, because this is so new and we have a lot of ways to go. Bitcoin, why it will continue to rise. Again, fixed supply, growing demand, network effect, mathematical predictability. Again, I'm gonna broach the topic of what Bitcoin versus crypto is, because that is a very differential topic. There's crypto and there's Bitcoin. Crypto does have centralized networks. It's a decentralized ledger, but it is ran by companies. Bitcoin, again, has no company behind it. A lot of the cryptos, Ethereum, Solana, the other ledgers do. And I am a huge proponent of not having a company come in and be able to print more Bitcoin or crypto. And the crypto's assets does have the ability to have the network have more crypto added. Again, fixed supply is why Bitcoin is the best. And the conclusion is I would really appreciate if this committee would look into, again, investing in our pension funds and protecting the blockchain and protecting the node runners with 4511, because this is an extremely important technology. We are extremely new. And I am so tired of Michigan being left behind because we don't grasp opportunities like this. We had the best manufacturing in the world, and we could really have the best innovation and technology in Michigan with embracing the digital asset of Bitcoin. Thank you so much.
Thank you. We do have a few questions, but before we move on, could you have your guest introduce themselves?
Absolutely. This is Bryce. This is my senior advisor. So when you guys hit me with hard questions, I just go like this.
Hi, Bryce McDowell.
All right. Thank you. We do have a few questions. One question I have is, we talk about there being, a lack of knowledge in the actual populace. And I think one of those concerns, are we working a segue into cashless, right? I think that's a big concern for a lot of people. Can you touch on that concern?
Absolutely. So, as in a cashless society, I think we're already there. I think we've been trending to that since the adoption of a credit card and with banks. I don't think this is going to come in and necessarily replace the dollar right away, but I think the dollar has replaced itself. So a tangible asset, I think that we've seen empires fall with gold and silver being manipulated and the dollar being manipulated. So as far as having a cashless society, I mean, I think that's inevitable with the way inflation has risen. But Bitcoin is the most secure asset we can have now.
Great, thank you. Moving on with some questions. We do have a couple questions from Representative Tate.
Thank you, Mr. Chair, and thank you all for coming today. Really appreciate the opportunity. I think many of us can't speak for my colleagues, but moving up the learning curve around Bitcoin, crypto. The question I have, and this might be something that can be taken offline as well too. I know you highlighted just the positives and kind of got into a little bit of the complexities. But I know, like with everything that we work on, what are some of the risks as well too? Because I know everything's not going to be perfect, but just kind of for us as we are learning about it, are there any potential risks that you see with crypto, with Bitcoin that may stand out for you all?
I appreciate that. Thank you so much. I do think that the education risk is what the biggest risk is. Right now, we have a big gap, and I think people that aren't educated do silly things. But besides that, it is the most secure network. I do think crypto poses some risks just because of some of the security issues behind some of the blockchains. Bryce, do you want to take a security guy?
Security guy now. When it comes to crypto in general, there's thousands of cryptos, right? Most of them can't be trusted. And again, the companies can just change them on a whim. So there's not going to be any stableness to them. Even Ethereum itself has been changed several times, especially going from proof of work to proof of stake, which just changes the whole thing fundamentally. Like that's not good at all. Bitcoin has not changed very much at all. And to your question, though, specifically about what are the risks, I would say the risks, at least for Bitcoin, because I wouldn't touch any other crypto, to be honest, I wouldn't say the risk is higher than doing anything else digitally online. Like if you're already using Cash App or if you already have documents in a cloud or something, that's just as risky as Bitcoin would be, just because everything online is risky. Well, I mean, anything in life is kind of risky, right? And from a philosophical angle. But yeah, Bitcoin, if anything, is going to be less risky than pretty much anything I just mentioned, just because of its stability and the way it functions.
Thank you. Thank you, Mr. Chair.
Thank you. No further questions. Thank you for the education. There's still a lot to learn. Oh, we do have a question. Majority Vice Chair Bonak, please.
I need some help on this. When it comes to abandoned wells and the mining of Bitcoin, will this energy that is still within the well, let's say oil or gas, will that be then connected to the grid for Bitcoin mining, or will that be a standalone entity where one can pull energy out and use it in the form of electricity to mine Bitcoin?
Right. So it's not going to be connected to anything at all. They're going to build the infrastructure on the well, and the power is going to be used directly right there. And that's a good thing, because transmission lines themselves eat into the efficiency of energy. So yeah, the methane is just coming out of the well. It's going to be burnt right there, which is better for the environment than just letting it go up, by the way, even if it is not perfect. But when it runs out, then we just cap it. Pretty simple.
All right, thank you. In conclusion on this bill package, we do have, Representative Brixey, do you have a question?
Do we have another group testifying? I have questions on the retirement one that I wasn't allowed to ask.
Yeah, and we'll have opportunities to follow up on that. This isn't a one and done deal. This is a very complex issue. So there'll be, more conversations to be had. The previous bill sponsors had other obligations, committee obligations that they had to go to, and I would strongly urge you to follow up directly to the bill sponsors as well, particularly.
So we won't have a public discussion?
We may, but we're not making that determination now. So if you've got a specific question to Ms. Harris, now's the time. Otherwise, we do have to move on, Representative.
Thank you so much.
Great. Also wishing to speak in support is Tom McCarthy from the Satoshi Action. Did I pronounce that correctly? Yes. Great. Come on up and start when you're ready, sir.
Mr. Chair and members of the House Economic Competitiveness Committee, thank you for the opportunity today to testify in support of House Bill 4511, which establishes clear protections for digital asset users and promotes blockchain innovation in Michigan. My name is Thomas McCarthy, and I work at Satoshi Action Fund. We are a consumer and innovation-focused nonprofit organization dedicated to promoting education and advocacy for Bitcoin and digital assets at the state and federal level. We have supported Bitcoin and digital asset legislation that has passed in multiple states, and I'm really grateful to be speaking with you today. A core responsibility of the state government is to protect individual rights and promote innovation within the state to enhance its economy through emerging technologies. HB 4511 achieves this by prohibiting the state or any political subdivision from banning or impairing the ability to hold digital assets. This ensures that Michigan residents can securely possess and use digital assets and do not face discriminatory taxes or fees solely for choosing to use blockchain-based payments. By removing these hurdles, the bill empowers Michigan consumers and businesses to participate in the growing digital asset space. Furthermore, HB 4511 protects essential blockchain activities by preventing prohibitions on operating nodes, transferring digital assets, or participating in proof-of-stake protocols. These provisions are crucial for maintaining decentralized networks that allow blockchain protocols to secure transactions without essential authority. For example, node operators and stakers contribute to network security, and this bill fosters a supportive ecosystem and environment for blockchain activity and development. This can attract companies and developers to Michigan and position the state as a hub for technological advancement. A clear beneficiary of this will not just be the state of Michigan, but also its residents and the constituents that you all represent. Other states are taking action. Montana, New Hampshire, Oklahoma, and Utah have all passed similar legislation. This bill also prohibits state agencies from supporting a central bank digital currency, otherwise known as a CBDC. CBDCs raise serious privacy and surveillance concerns by enabling government overreach into personal finances. A CBDC is diametrically opposed to our country's founding principles, specifically the Fifth Amendment in the U.S. Constitution, which instills property rights. Michigan can join other states such as Florida and Indiana, which have enacted anti-CBDC measures to protect their residents from overreach by the federal government. By opposing CBDC testing and adoption, HB 4511 reinforces Michigan's commitment to innovation and protecting the privacy of its residents. To conclude, HB 4511 is a forward-thinking measure that bolsters economic activity, protects users' rights, and sends a signal that Michigan will take leadership in the digital asset space. I urge this committee to advance HB 4511 to unlock the benefits and protections for digital asset users in Michigan. Thank you for your time, and I look forward to answering your questions. But before I do, I just want to quickly run through some of the questions that were mentioned earlier and just provide some additional context. So there was one question about holding digital assets. So you can think of digital assets as a digital bearer instrument, and it's secured through cryptography. So if a user wants to transfer digital assets, they need something called a private key. It's basically the master password. So when you think of your wallet, your physical wallet, digital assets are held in what we call a digital wallet. So that's how you hold digital assets. So there's also a question about auditing Bitcoin and how that's a challenge. That's honestly categorically false. The Bitcoin network operates on an open, publicly verifiable ledger that's accessible 24/7. The person previously mentioned that anyone can run a node, so all of us here can run a node and audit the Bitcoin network in your own personal computer. So the barrier to entry is very, very low. I think there was more concern about where people buy digital assets. So there's actually a huge myth that digital asset companies are unregulated. That's honestly fundamentally not true. So anytime, anywhere a user wants to buy digital assets in the U.S., they have to go through a regulated company. And I've actually been working for the last 4 years to actually pass legislation on the federal level, which is actually going to put more regulations on companies. So where people go and buy digital assets, all of those are audited and regulated, and we're actually trying to put more guardrails through market structure legislation. So those companies are regulated where people actually buy digital assets. And then the last question on risks. So what I would say is one of the risks is honestly just bad management by user error. So unfortunately, I think a lot of times people hear about hacks, and they confuse the network being hacked, but in actuality, it's actually the user themselves. We're not putting in proper guardrails to secure what I said earlier, the private key, because your private key is your master password. So if someone gets a hold of your private key, they can actually gain access to your funds. But that problem has actually now been solved through institutional grade custodians that BlackRock is using and the major publicly traded companies that use to hold digital assets. They go through regulated custodians. But I'll say just on a personal note, I see one of the risks I see with Bitcoin is actually less so about it succeeding and more so about Bitcoin's concentration of wealth. I don't want to be here promising, economic freedom, which I do believe Bitcoin provides. But then, 15, 20 years from now, there's just a concentrated wealth in Bitcoin in only a few amount of hands. That's why I've spent the last 7 years of my life educating and talking to as many people about Bitcoin to spread this opportunity, because I still believe Bitcoin at 100,000 is a very, very fair price, especially when we look ahead in 10, 15, 20 years from now when Bitcoin is in the millions of dollars.
Thank you for your clarification. We do have a couple questions. Representative Brixey, if you'd like to start things off.
Thank you. I appreciate you addressing some of the questions that have come up before. Can you tell me who you are with again?
Yep. So I'm with Satoshi Action Fund. We are a C4 nonprofit. So essentially we advocate on behalf of users. So our whole mission is to ensure that users can retain access to this technology. We were founded during a time where there was actually a lot of regulatory hostility to prevent users from having direct access to decentralized technologies. That's why we're a huge proponent of self-custody.
So who funds you?
Yep. So as a C4, we receive donations from individual donors. So a lot of our supporters are people, even some people in the state of Michigan, who believe in us, and they send us monthly donations of anywhere from $5 to $25. We're also supported by some of the largest companies in the space, but at the end of the day, we are a C4 nonprofit.
Okay, dark money to anyone who's watching. Okay, so I have a couple of questions. So, the risk that my colleague was talking about is different than the risk that I'm concerned about. Just to tell you a little bit about myself, I'm a former treasurer of a local community, and I did that for a decade. I got elected in November of 2008 at the beginning of a very, very terrible time, the Great Recession. Part of my job there was investing surplus funds for Meridian Township. And along with that, when you look at the traditional financial markets like banks, they're highly regulated. And that's for a reason, because of serious collapses that have occurred in the past. And we learn from these bad experiences. So the investment risk that I would be concerned about is that there's no regulation and there's no ability to hold the companies. There's no fiduciary responsibility if there's no regulation. if you're going to invest in an investment fund, if you're going to buy stock, if you're going to go to a bank, there's all sorts of fiduciary responsibility with that, and there isn't with this method of resources. So, and the auditing that I was talking about is not auditing the snap in time that anyone can go and look at, but when you are investing funds for a government entity, which is one of the bills that we're talking about, is using this as an investment for pension funds. You want to do your research, and you can't really do that. You can't verify.
Representative, is there a question in here? Can we move on to the question?
Yes.
portion of this, please?
Why are you opposed to any kind of regulation?
So, so I'm going to first clarify and say that in this testimony is only supporting HB 4511. I'll also counter and say, again, the statement that digital asset companies are not regulated is categorically false. They are regulated at the state level. And once again, in my testimony, I said that I've been spending the last 4 years in DC advocating for regulation and passing market structure federal market structure bill in DC, which is actually going to provide more regulations to the industry. So our industry, we want regulation. So that's just my personal take. But for the purposes of this testimony, I'm specifically advocating for 4511.
Okay, and then so for 4511, then the risk, the safety of Bitcoin. One of the previous people who was talking about, and you've mentioned all these other states, El Salvador has been mentioned as adopting Bitcoin as legal tender. But in January, their legislative assembly voted to abolish the legal tender and limiting it to the private sector, which to me raises some serious questions about what did they learn and.
Yeah, so I'll give you my personal answer as to why that happened. I mean, I can't say definitively, but I do know that there was significant pressure from the IMF to pressure El Salvador in exchange for El Salvador gaining loans back from the IMF that were cut when El Salvador started that bill. But that's just my own personal take. We'll have to see why that ended up happening. But that's just my personal belief as to why that law was rescinded.
Thank you.
All right, thank you for your testimony, Mr. McCarthy. We are moving on here. We do have a few cards to read in here. Neutral on House Bill 4510 is Sean Sorensen Abbott from the Michigan Department of Treasury. Not wishing to speak, but supports 4511 is Chris Edwards from the Assistant General Counsel of the Bitcoin Depot. Not wishing to speak in support of the bills 4510 and 4511 is Bryce McDowell from MIBTC from Wyandotte, Michigan. Also in support, not wishing to speak on House Bills 4510, 4511, 4512, and 4513 is Kel Thompson. Excuse me if I butchered that. That also from MIBTC. Not wishing to speak in opposition of the bill, opposition of bills 4510 through 4513 is Tim Minotis from the Sierra Club. Also wishing to oppose the bills 4510 through 4513 is Carly Knott from the Michigan Environmental Council. Not wishing to speak opposing bills 4510 through 4513 is Mara Johnson from, is that the Climate Cabinet? All right. Great. Moving on. Very robust conversation there, and I'm sure there's more to be had. This is a very complex issue, but I do thank everyone for coming in and testifying. We are going to move on to our next bill, and thank you for your patience, Representative Mueller. But we will take testimony now on your bill 4492. Please come up and start when you are ready. And I also see John McNamara is also going to testify alongside you. So go ahead and begin when ready, Representative.
Wow, that was a lot of information you guys just went over. This is pretty simple. What I'm trying to do here is basically we're dealing with money here, right? Like cash, not coins. So this is just a cleanup bill for, and I'll let John McNamara here. He'll be able to explain everything to it. But basically, what it does is when they did the tip pooling credits, if one person doesn't want to do it, then it just screws everything up. That's all I'll say is, this bill, what it does, it's a cleanup. It provides consistency for the tip worker in the restaurant industry, and I'll let him explain. It's relatively simple, but for some reason it's confusing to me. So I'll let him talk about it.
Thank you, Representative Mueller, and thank you, Chair Holding, members of the committee. I think everyone knows, but for record-keeping purposes, my name is John McNamara, and I'm the Vice President of Government Affairs at the Michigan Restaurant and Lodging Association. What this does is clarifies that tip pooling can be compulsory in the state of Michigan. So prior to Senate Bill 8, if I worked at a bar or a restaurant anywhere and they're going through the process, they could say, hey, John, super glad you're going to work here. Just so you know, we require employees to take part in a tip pool. And they hand you a piece of paper that says if you're a server, you're going to tip this much to the busboy, this much to the hostess, this much to the bartender at the end of your shift. It's an incredibly common practice that a lot of bars and restaurants choose to utilize. An unintended consequence of Senate Bill 8 was that tip pooling then became voluntary. So essentially, servers, bartenders could decide whether or not they want to be part of the tip pool. This seems something that's great. However, it creates incredibly terrible administrative situations. For example, let's say you're a server at a higher end restaurant. You have a big table. You have, it's a couple $1,000 tab, which means you're going to probably get, as long as the person's doing what they should do, you're going to get $500-600 in a tip. Let's say you're like, well, you know what? I don't want to share that tip. I'm out of the tip pool for this instance. And then maybe an hour later you decide, well, no, I want to be part of the tip pool. How does the business owner sort of keep track of people going in and out of a tip pool? And this is, everything from a super high-end place, to your college bar. A lot of college bars utilize tip pooling as well, whereas there is a central drawer where everyone sort of puts their tips, or, now it's all credit cards, so it goes to one area. They split them up at the end of the night. If I'm the business owner at a more collegiate bar, and one of my employees says, you know what, I don't want to be part of that tip pool, do I then have to have a separate POS? Do I have to have a separate whole bar set up where that one employee is going to operate on their own because they decide they don't want to be part of the tip pool? And before I take any questions, I will add that with the language we currently have in law is only Minnesota and California have that language. Minnesota and California are not tip pool states. They don't utilize a tip pool. So this also really would sort of bring Michigan back in line to our fellow other states who utilize a tip credit. And happy to take any questions, but I do believe this was just an error in drafting and something we're looking to clean up.
Representative DeBoyer.
Thank you, Mr. Chair. So my initial reaction to this was not in favor of it when I saw it, right? How and a little bit of it is just pure ignorance on how it goes on in the restaurants, right? How do you justify an individual who believes that maybe they're actually getting the wrong end of the deal because there's people in the tip pool who aren't carrying their weight? Like, how do you, help me just understand that a little bit.
Okay. Yeah, no. And I think that's a fair point. And I would say one that, obviously those people can sort of choose to go work somewhere else should they want to, but also anyone who's worked in a restaurant knows it is a very team-centric environment. If there's one person who's not pulling their weight, the other servers are going to let them know that, like, hey, this isn't working because of you, and those people will usually sort of self-select out. But to counter that as well, let's say I'm a bartender, and I'm relying on, I'm not gonna see the customer, but I'm gonna make all the customers' drinks. All of a sudden, if one person decides I'm not part of the tip pool, therefore I'm not gonna tip out that bartender, your drinks are gonna go real slow, and I'm probably gonna get them wrong, and then it hurts everyone else. So it's just more that restaurants are a team environment, and this just helps the team operate. Absolutely.
Thank you. Representative Brixey, question?
Yeah, thanks for coming. Thanks for helping make this a little bit easier to understand. I have a question about the minimum wage component and utilizing the tip pool to pull away from the wages. So you can pay below minimum wage if they get tips bringing them to minimum wage. Is that
correct?
Right? Okay, so is that why this is different than in Minnesota and California?
Correct. It is. Yes, that's why it's different, because Minnesota and California do not utilize a tip credit. Therefore, just their restaurants are structured differently. Whereas, the 43 states that do take a tip credit, that would be the difference, and that's why Michigan is the outlier, because we are a tip credit state, but we have language in there from 2 states that are not a tip credit state.
Okay, so but you're striking the words gratuities and service charges paid to an employee are in addition to and do not count toward wages due the employee. And that's what was approved by us. So it seems like that sentence doesn't need to be struck in order to accomplish what you've described, which is the, where's the rest of it? Shoot. I don't think I have all the pages here. It seems like adding section 5 that says it doesn't prohibit an employer from requiring them to share with the other employees. It seems like you don't need the previous sentence struck in order to do what you described, which is to allow people to have to share the tip pool.
And I obviously, I was not involved in the drafting of this amendment. This is something we worked with Rep. Mueller and LSB on. That might be a question for LSB, but happy to get more info on that and take a look at that. But
okay, Rep. Mueller.
I'm not an attorney, and I'm not going to try to play one.
We'll, like you said, we'll just have to ask and see what the consequences are or why they did it.
Gratuities and service charges paid to an employee are in addition to and do not count toward wages due the employee.
Yeah, we'll check with LSB and we can get back to you.
Okay, thank you.
Great. Thank you both. We do have some cards to read in here before we conclude. We have not wishing to speak in support of 4492 is Jacob Manning from the Small Business Association of Michigan. We have not wishing to speak in support of 4492 is Randy Gross from the Michigan Chamber of Commerce. Not wishing to speak in support of 4492 is Amanda Fisher from NFIB. Not wishing to speak in support of 4492 is Scott Ellis from MLBA. All right. Thank you, members, for your questions and the robust conversation we had today. That concludes our agenda for this morning. Seeing no further questions, Representative Begol moves to excuse all absent members. There being no objection, absent members are excused. There being no further business before the committee will stand adjourned.